Good evening, everybody. All right. I realized after we talked this afternoon that I was trying to cram too much into one session, so we're going to skip the spread and do that on an option night. But what we will do is, let's say, obvious observations. So I'm going to be mentioning things that have been brought to my attention over the last few days to kind of expand on everybody's, say, logic assessment of what is going on in the markets. So with that, as we can see in the Dow, we're still in a nice steady uptrend. So what's our evaluation of the Dow right now? Well, first of all, not too long ago, we had that doji sandwich breakout through this downtrending channel and right off the 50-day moving average, pretty much an indication that the 50-day moving average was not going to act as resistance. It did a few bobbles in here, but continued right on up. So that now not only have we broken this downtrending channel, we've broken this little resistance level. We have a J-hook pattern, and where's our next likely target? Well, we're almost there at this level, so we need to see whether they pull it back, or right now, as long as we can stay above the T-line, we're going to be in good shape, or meaning that we're in an uptrend. So can we analyze what the markets are doing just by the Dow? Well, obviously not. That's where having the visual analysis, which is very quick and easy, once you can your eyes assess what's going on, we can pretty much see here in the see if I can do this. In the NASDAQ, we had kind of a, well, what is that? I don't know what that is. Well, for crying out loud, that's something new, but that's pretty nifty. All right, let's get rid of that. Okay, let's do it without that. We can see there was a resistance level right here. We can see there was kind of a wedge formation. And we can also see that when the NASDAQ came up through that through this resistance level, how did it get there? It did it by gapping up through. Fibonacci's are on the muck. Whether the hanging man, well, we don't really have a hanging man. And that's really just a nothing. And remember what a hanging man requires? Definitely a tail that's 2 times greater than the body, which in this case it's not. So all we do is just have kind of a little update or update and another analysis. Notice where we are. We're not only above the T-line, but we keep using the 3T line as our support, which is a good indication that the bulls are definitely in control. So if I can look at this and say, all right, we've broken out of this kind of wedge formation. We did it with a gap up. And right now, we're not even trading back below the 3T line, let alone coming back to the T line. You add that with the assessment of the Dow, where it consolidated and closed higher. The S&P 500 also gapped up, coming out of a J-hook pattern, breaking through this resistance level, still trading above the 3T. And I think even the transportation index doesn't have anything in here that would show there's any real great selling pressure coming into this market. So if you add that all up, you pretty much can tell that we're definitely in an uptrend. Now, another term I'm going to kind of address tonight is the term diversify. And so if I can go off on a tangent here a little bit, I've heard so many money managers say, oh, you need to diversify. And I've probably mentioned this in the chat room before. What is the analysis or the, the practice of diversifying? That pretty much says, oh, you shouldn't have all your money in one place or in very few places. You should have it spread out. And why do you want to have it spread out? Because if one area is not working, hopefully another area is. So you're not losing your shirt. That always to me seemed like if one area is not working, then why as an investment manager or as an investor are you in that area? Now, as a trader or somebody that can sit pretty much or watch the markets, whether it's on most of the day or whether you can only come in maybe 2 or 3 times a day or even once a day at the end of the after hours, that means you can pretty well assess what's going on in different sectors of the market. So the term diversify to me means this is just a lazy approach to say, all right, I'm going to put your money away, invest it in something, and I don't have to worry about it because if something goes down, something else will go up, and you're protected. Well, that's about as vanilla as you can get with investing. So you run that all the way around the other side and say, all right, why would you diversify if you can sit and watch the markets on a very short-term basis? And I can't find an answer to that. So if we know the market is heading up, and we know that there are sectors heading up, sectors heading down, what do we want to do? We want to find the sectors that are going up the strongest. We can do that by outside analysis or outside indicators. For example, today earlier we just did kind of a, we don't want to do that. We did kind of an analysis. Wow, I've never seen that before. That crude oil has been getting obliterated for the last 6 months. Coming on, let's see, this is the March contract, from $100 down to $45. And now it's heading back up. How did we know that it was heading back up? Because we saw this huge morning star signal with a doji in the oversold area, a close above the T-line, and it started to confirm. So what was the first target? The 50-day moving average. When it was moving up, if you remember, that's John, that's exactly right. For those that diversify, don't know how to analyze or know where to be putting their money. So my idea of diversifying is not finding the best sector that's moving up, but maybe buying the best 2 or 3 sectors and having money in each one of them. Which means if I've got 10 positions on, I might have 3 in oils, 3 in biotechs, and 2 in whatever else is moving, and maybe 1 or 2 just because they're good charts. But I'm going to be a little bit heavily oriented toward the sectors that we know are moving up. So remember, the other day when oil started coming up, there were so many analysts on CNBC and Bloomberg saying how oil was going to $20 to $30 a share. The analyst at Goldman said it was going to 35. And one thing I've always discovered is that no matter whose opinion you listen to, there's only one element that's right, and that's the market. And the market was telling us it was going up, and everybody was giving their opinions, but the market was telling us what the overall opinion was. So right now, we've seen crude oil come up, hit the 50, pull back, and now come up through the 50. Definitely we'll watch this to see if they take this higher. Where are the targets on crude oil? Well, that's a good ways away up here at the 200. And so this is where, if you don't know where a price is moving, oops, I didn't want to do that. Let's see if I can do this. If you don't know where a price is moving, you watch to see where everybody else thinks the price is moving. So you can put your Fibonacci numbers on, or your Fibonacci retracements. So if this was the high, this is the low, your retracement levels It's not that they're going to get there, because I'll sell based on a sell signal, but I will look at these levels to see if that's where they can move to, and if they get up here and I start seeing sell signals, or here, or here, or here, or a combination of both, at least I know that's where everybody's watching to start taking profits. So with that in mind, if you realize that everybody was selling crude oil or selling oil stocks because crude oil is crashing, then the simple logic is the ticker on this chart. Yeah, the ticker on this chart is CL. That's crude oil. H stands for March and of 15. So the logic is, if crude oil is moving up in price, a lot of these stocks that were being just devastated, Whiting Oil is the one that we're recommending not only for a short-term trade but also for a long-term hold. But it's got a nice chart. It's got a fry pan bottom, J-hook pattern. Let's make this bigger. So I even have had people today say, well, shoot, should we be buying oils? Because people are saying it could go down to $25 or $30 a barrel. The answer to that is, if you're listening to them and you're investing with them, then you do what they say. If you're doing what the charts tell you, this chart is telling me that crude oil doesn't seem to have any real concern at this moment. And what is the normal reaction to human human sentiment? Is that when everybody sells, they all sell. When they start buying, they all start buying. So we can start looking at, that's why we recommended CRK today, because it's got a nice looking pattern. Here's our bobble. This time the bobble came back to the T-line area, but actually used the 20 as a support and came back up through the 50, which was acting as a resistance. First target right here. Second target, fill in the gap. Third target is way up here someplace at the 200-day moving average. So why are prices going up, or crude oil stocks going up? And why is crude oil going up? If everybody thinks there's way too much oil out there and that the prices should be going lower, well, somebody might be thinking, well, maybe they just sold off crude oil prices way too far for the amount of supply that's out there. And maybe it should be actually $70 a barrel. So this is why I always tell people, don't listen to somebody or anybody, even myself. I have no more idea where crude oil prices are going. I don't have any idea where the market is going. All I can do is analyze what the charts are telling me and which way the current investor sentiment is going, and investing in that direction. So right now there are a ton of stocks that have excellent charts. They're in the crude oil or in the drilling area. Here's SSE, another J-hook that came up through the 50-day moving average using the T-line as support. I wouldn't be surprised if they don't come up into this area. There's a gap to fill if it wasn't filled right here. So logic dictates that if NE, Noble Drilling, if these are all good-looking charts, what's that telling you? That's pretty much telling you that the big money is buying the oil stocks again across the board. It's not the little guys out here buying these stocks. It's the big guys coming in and starting to buy back their positions or loading up on positions they think are now over or undervalued. Diamond offshore, uptrend. What can we analyze from these charts? Well, we know that belt hold system took out a lot of, or belt hold signal took out a lot of sellers. We should be in an uptrend. No, you're not chasing stocks that have just started. This is just now confirmed. So no, I think there's at least another, you could possibly get a 60% return. What is this? 50% return, just coming back up to fill the gap, possibly coming all the way back up to the 200-day moving average, which would be a 160% return. Ruh-roh, that's not good. That's, did I do that wrong? Maybe. Another one that just came up through the, this is FTI. Ooh, I thought this was an oil. An ONR. Well, shush butts. This is strange. This system sometimes doesn't have the same. There's PDS, another little cup and handle. And where did it come up through? Use the 50, bobbled, came up through, use the 50 as support. First target is to fill this gap. If it gets running, another one that's got a 50% upside potential. And LPI. So the reason I'm showing this many stocks is that if all the numerous oil stocks are showing good chart patterns, which is, again, the reoccurring graphic depiction of investor sentiment, that means the big money is buying the oils back. And this is where, if my idea of diversifying is maybe out of 10 positions, I got 3 or 4 oils in there and 3 biotechs and 1 or 2 others. That's, if we're sitting here and watching them every day, or pretty close to every day, what do you, I guess what do you need to be protected from by being being diversified? Nothing really, because if you see something that's not working, you close it out and you move on to something that is working. All right, I got a few others mixed in here. ADHD, another good-looking fry pan bottom, right at a breakout level. If it breaks out, where is it going to go to? Up here toward the 200-day moving average. Now let me do some stepping back. Somebody asked today that they'd gone short on STX, yet it hadn't closed below the T-line. Well, that's still a decent trade, because what do we do if we start seeing weakness after a doji getting up toward the overbought condition? If they open lower and start trading down, where are they likely to go to? Back to the T-line. So what's our analysis for the next day? Well, we better see it trade. If we're short, we want to see it come back down through the T-line. If it shows support in here and starts trading back up, you close out the position. So this isn't a bad trade. It's just that you may be early, but you need further confirmation to the downside. VJet, somewhat along the same lines. This is why anytime you're up in an overbought condition, no matter what type of pattern you're in, just do a safety stop right here at the previous day's low. This shouldn't open and trade back below this level. Otherwise, knowing that you're this far away from the T-line, there's a good possibility they could come back down to the T-line. If worst case scenario, if you didn't stop out here, you closed out here because now you have a left-right. Worst case is they do a doji, and then they start buying right back in again. There was one like that. Was it WLL? No, WLL had kind of the same scenario the other day, where they started selling it off. Where were they going to sell it off to? Back to the T-line. If you closed it out, you could always buy it back, but you were protecting yourself from watching it go all the way down here to the 50 and maybe not recovering. I don't mind closing out here and buying back here, knowing when I'm buying back, it's moving back in the right direction. John, hold on to the individual ones. Let me get through some of these. Now, another strong, oh, I didn't even go through the Did I go through all the commodity charts? Apparently I didn't. Let me take a break here for a second and show kind of that slow curve rounding bottom. There's what you would call the dimple out of this fry pan bottom. And dimple's the big move, and then it came up. This is soybeans. Now on wheat also has a good chart, and it just opened up higher after hours. And so here's what I was going to illustrate with this chart. That if you see a price move starting, this one's a pretty strong one because it's supported right here where they move into the 20 and the T-line were coming together. After this big up move and then your doji sandwich, your consolidation, then you had another big up move that came all the way back down. You're not in the overbought area. Very simple. If it opens positive after they had this big profit taking, that tells you the profit taking's over. The whole chart is still in progress. Oh, okay. MCP, MPC. Whoops. Yeah, this is more of a steady eddy. Morningstar signal, doji sandwich up through. Okay, I'll get to the individual ones. Let me get through these. All right, anytime I see this big gap up, especially off an indecisive day, like an inverted hammer after a couple dojis right here on the 50-day moving average, what do we expect after that? We pretty much expect, what did I hit that one? We pretty much expect this type of move. But this has told you something. There's been a big change of investor sentiment. Why do we like these big moves? A lot of people say, well, do I want to chase after this after it's up 50%? You do if it's going to be up another 250%. So a big price move, big candlestick signal puts you in situations where there's been a change of investor sentiment. TTS, big left-right combo. You want to start watching this to see if they're going to start trading this one higher. SRPT. Fry pan bottom breakout. Doji, big move. This one has a very strong probability that it's going to go much higher. Now remember, when you're looking for signals, you're looking for the oversold condition. When you're looking for a breakout of a pattern, you're probably going to be up in the overbought condition. And LCI, oh, there was a point to be made on this one somewhere, and I don't know what happened to it. I'm guessing it was the breakout of the fry pan bottom on the gap up big move, or over here where you had the big left-right combo starting your uptrend. There was something more pertinent than that one. I don't remember what it was. Kendai. Today had a gap up. Now remember, this is your message right here. A lot of strength coming back in after a series or a couple of dojis. Stochastics coming up. Makes this very simple. We know the simple rule of the doji is going to be that it's going to move in the direction how they open it after a doji, which means this becomes a very good prospect for further upside, especially if they can close it up above the 200-day moving average. Oh, I had a cup and handle. All right. What did I just do? Kendai. All right. EBIX. Fry pan bottom breakout. This is why whenever you see a fry pan bottom setting up and they start trading above this level, you can be buying. you're always going to get a big, huge move like this? Definitely not, but you still have the prospects of being in a big, huge move like this with the probabilities that you are going to be in an uptrend. And every time we put our money into something where the probabilities are showing us we're in the right direction, that gives us that much more prospects for being in a big move. Another one, with a doji breakout of this fry pan bottom, it pretty much tells you there's going to be more upside. Wave 1, or at least wave 1, wave 3. A big move through the resistance levels. That pretty much tells us they didn't care anymore about the resistance levels. They were going through with great force. Also tells us there's going to be more upside. So this is why a lot of the stocks that we go after are after a big price move. Now other ones, like we recommended today on ASPX, that was setting up that if it broke out through this level, which it did, we were in wave 3. Same scenario on CEMP. If it broke out through this level, we were in a good wave 3. Now, kind of slowed down today, but it still did a doji type day, which makes this very simple. If it opens positive tomorrow, doing a doji sandwich, which means we're going to close up here, we're well above the breakout level. So these are just kind of things that I look for each day, is what type of pattern is setting up and what type of signal might enhance that pattern. Breakout level, Morningstar type signal. They open up positive. They've broken out. This tells me we're in wave 3. And as you can see, most of these are biotechs. So same scenario is if we can see that there's a lot of oil stocks heading up, and we can see there's a lot of biotech stocks heading up, that pretty much tells you it's not the little guys, it's the big guys coming in and buying up these stocks again. You have a favorite one or two you like to trade? No. I can find the best trades out of 8,700 or whatever it is, the trading, the number of tradable stocks out there each day that fit in my universe. Actually, my universe is about 2,750 stocks. I can do the scans in my case, less than 5 minutes each day and find the best trade setups for the next day. Even if you're not that experienced, you can start recognizing the signals and patterns. It's going to take you less than 20 minutes every day to come up with the best signals or patterns for the next day. So there are going to be times your favorite stock, whether you're trading Apple or Netflix, all of a sudden go into a funky sideways and you don't have anything to trade. Trading all of the stocks, you've always got more supply than you can have. Yes, there are tutorials on all this. Rick, just go to our products and services. There is probably 50 or 60 training videos out there of any topic. How do you locate equities with the best profit potential? That's the whole purpose of this website, is to teach people how to do their scans for the best possible trade setups. We also have a video that shows the best trade setups quantified, which is your best friend, or your left-right combo, or your fry pan bottom breakout, or your J-hook breakout. There's about 18 of them. A lot of people ask which signals are better than the others. The answer to that is none, because sometimes the hammers will be working the best. The market conditions 2 months from now, it might be the dojis with a gap up. What product do you use to find them? Oh, whatever your scanning software. We use Metastock for scanning. We use TCNet, Warden Brothers. We are just now putting the formulas on Thinkorswim, so you can do your scans right there on Thinkorswim without having to go to another software. Ninja Trader, TradeStation. So the softwares are out there, or the formulas are out there. And on top of that, if you need a formula written, Ed C, right here in the chat room every day, is the best person to go to. If he doesn't have the formula already for you, he'll write it up. And there's no formula in candlestick analysis is that difficult to write. If you can say the formula or describe the signal or pattern in words, it can be put into a simple formula. I only trade futures and spot forex. Does your system work on these? Darren, Candlesticks was developed on the most basic of all commodities in the world, and that was rice. I trade all the commodities. I trade the currencies, bonds, whatever the charts look the best at the time. Where do you find Bob? I jumped the gun. I think they are just becoming available within hopefully the next week or two. We did a session on it the other night, and the guys writing the formula said that they would probably be ready within the next 2 months, but they were trying to cover their butts. It'll probably be ready here in the next couple weeks. All right, what else were we looking at? Oh, a lot of the, what is that, ECYT, nice fry pan bottom breakout. ARWR, another nice fry pan bottom breakout. Where do you think the likely target is going to be? The 200-day moving average. Where was it supporting? Right smack dab off the 50. VJ, yeah, the scanning part will be ready probably within the next week or two. And I'm probably on a little bit short side as far as optimism, but I think they've got all the material they need to finish up the scanning parts of it. They already have the identifications. You can put all the identifications on, so if you're still in the learning process, it'll show when a best friend signal shows up, or shows when a hammer signal shows up. So CYBR was showing this because notice what started this uptrend. A lot of people say, should I be buying here? Should I be buying here? Should I be buying here? The answer is we've got the ability to identify that this was the buying spot. When we had those series of dojis and a gap up through the T-line and breaking out through this downtrending channel, that was the time to be buying. How long do we hold it? Until we see a sell signal and a close below the T-line. We're still having a big move to the upside. So at this point, I'm flipping to my 10-minute chart to see if there's any weakness starting to come in. Worst case scenario, at this point, I'd set my stop halfway down this candle. If they came back down through there that high up, notice how we're not only a good fur piece away from the T-line, we're a good fur piece away from the 3T line. So I'd use the halfway point. If it came back down there, they're coming back down to test one of these. And that's not, which one are they going to come back and test? I have no idea. I just know that if you're that far away from the T line and the 3T line, the probabilities are if you start seeing weakness, they're already starting their profit taking. Did I do CYTK? There's that doji gap up off the 50, breaking out through this level. You can be buying this one with the anticipation you're now in wave 3. Now, when I say anticipation, that means we're looking at charts that have the same patterns, that work the same way as patterns have done for hundreds of years. The probabilities of being in the right place at the right time are extremely high. PRTA, looking for this J-hook pattern to break out through this level, which also means they'd be breaking out through this level, taking you up into new territory. Oh, let's see. David L. pointed this one out today. This is JRJC, fry pan bottom, breakout through the 50, right about where the indecisive trading started. Just tells you you probably got a lot more room to the upside. Again, the word probabilities or word probabilities is a pattern like this is demonstrating that it could go a lot higher. And taxi, there's that little bobble. Notice how this one started. Bullish piercing signal. Still resisted. Then we had another piercing signal. Following the piercing signal, a doji sandwich. What's a doji sandwich imply to us? There's going to be more upside. Where did they take it to? Right to the 50. Where could they not take it back to? They couldn't close it back below the T-line doing a J-hook. Here's the perfect place to buy. On a positive open, what's it telling us? It's breaking out of our little slow curve, our bobble. They're not staying at the 50 anymore. Will we always get a big move like this? Definitely not, but it puts you in situations where the probabilities are pretty strong you are in the right place at the right time. So that was taxi. That was like my buddy yelling, taxi, taxi. Yeah, because you got room for 2 pizzas and a 6-pack of beer in here? And he goes, I sure. And he goes, blah. I knew that would be something interesting. ROYT. Another big fry pan bottom breaking out. Where's your upside potential? What everybody else can probably see is up here at the gap, and then possibly go into the 200-day moving average. COLM, anytime you see that big move, there's probably going to be more upside. You just pick a spot that tells you the upside isn't working. At this point, I wouldn't want to see it come back down through this level. That would tell me the sellers are still in control. I'd have to wait to see what it did back at the T-line before getting back in. Lumber liquidators. This is where you observe the obvious. There's your Morningstar signal. There's your doji sandwich. There's hitting your first target. There's your bobble. There's coming up through the resistance level. Notice the pullback here. Lots of dojis, which means they aren't pulling back with any great conviction. And now, boom, they take it right back up when they can't get down through the moving averages. We're right at the breakout level. Lumber liquidators may not be a very exciting stock to buy, but at least we know we're heading in the right direction. On all the analysis that we can put in, I mean, these are all simple analysis visually. Morningstar, doji sandwich, bobble, support back at the moving averages. Now you have a doji gap up. If you understand what the psychology is behind each one of these signals, and visually you can recognize them, just puts you in a very positive or a very high probability setup to be in the right place at the right time. Another breakout, the big breakout. You just stay long until you see a sell signal. Those breakouts are also a message that there's new force coming in. Anytime you see a big move like this and they pull it back, notice how they gapped it up from an inverted hammer. Let's make this big enough where we can see it. If we understand what created this signal, after a big day there was lots of profit taking. Well, if they take it right back up again, what's that telling you? That after a strong reversal or strong signal and profit taking, the profit taking's over, they're starting to move it right back up. And HEES, there's your little J-hook. And what did the J-hook tell us today? That the 50-day moving average wasn't going to act as resistance. And notice how they got there. Anytime you're heading to a spot that tells you that everybody's watching it to see what it does, and they gap it up to get there, more than likely there's strong enough buying going on that they're not going to regard or care about the resistance level anymore. They're probably going to go right through it. And if they went right through it, what was that telling us? It was telling us it was breaking out through here, through the 50, and forming our J-hook pattern, implying that we're still going to go higher on this one. There's that big move. There's that 45 degree. Just observe the obvious. The obvious is when there's strong signals, APD, big kicker signal, how long do we stay in this one? Until we see a sell signal to close below the T-line. Flex, kicker signal, how long do we stay in this one? Until you see a sell signal and a close below the T-line. It's not that difficult. Once you understand where the important signals should occur, where the breakouts should occur, what your strongest signals are, at least you're putting yourself in situations where you know you're heading in the right direction. Are you always going to make a big profit? Definitely not. 1/3 of my trades, I calculate, are going to be losers. Whether they are flat, just slightly positive, or lower, it's a losing trade. So now that I understand that 1/3 of my trades are going to be losers, it doesn't hurt my emotions at all to see a trade not working and closing it out, because I know the next trade I put on immediately has 2/3 probability of working for me. So I get through the mental quandary of, man, what do I do now? Oh, if I sold it right now and it went up afterwards, boy, would I be stupid. Well, I get out of the ones that I don't know which way they're moving and move on to ones that I know which way they should be moving. Okay, that's about all we want to do tonight. Are there any general questions on candlesticks? Is there a top 5? I've usually when I go through this, it also helps me do the analysis of which ones look the strongest. Right now, I would say SRPT with the doji gap up coming out of a fry pan bottom has a good prospect of moving higher. Oh, there was another one that I was supposed to put marks next to it. Not that one. Oh, Kendai is one, but if it moves higher tomorrow, you can be buying it because of this big gap up. I don't know. Let's see. It was WWWW. That's a good looking chart. I had. Oh, I still didn't get through all the commodity charts, did I? I'm long cotton right now because of this slow curve and a positive trading today. Where's my anticipated target? Up here at the 200-day moving average. Let's see, KCAH, or coffee. Coffee, you get ready to go short because look where it closed today. Down below this little support level, which means if they open this lower and stochastics are still curling down toward the oversold area, there could be a lot more downside. And notice where, and I say notice, this is what you want to notice, is when you're looking at the trend, what's affecting the trend? Well, you can see that once they came through the 50, they couldn't get it back up through the 50. They took it down, took it back up. They couldn't get back up through the 50. So what's the implication of this price? We're still in a downtrend. Where's the next likely target for this? Well, if this is your trend channel, right down through here, probably somewhere down in this range. GMCR, yes, I'm still short this one. The spread may not work out the way I want it to unless they have a couple big, strong down days. However, when I put on the spread, which we'll go into detail here in the next few nights, doing some option, the spread did two things for me. My break-even was lower. My profitable upside percentage was much greater. And my amount of money exposed to the trade was much less. So even if this was a spread that didn't work, I can live with it because when I put it on, the probability said we could be going much lower. And more than likely, because this is a February, it may not work. But I'll keep watching this to see if now in the next few days, if this starts rolling over, I start putting on the March puts. Maybe not a spread this far out, but the puts, because where's your next likely target? Right down here someplace at the bottom of this channel. can you go through when you close due to candlestick signal and close below the T line versus other times when you close the price is going halfway down the previous candle? Yeah, I'm doing up a whole new session to go into more detail on that, Mark. But my number one criteria is the signal. So if I see a doji in the overbought condition and it opens lower the next day, starts trading lower, I'm closing out the position. Because where am I? I'm already in an overbought condition. I've already got a potential sell signal, and it's confirming. I'm closing out. My worst case scenario is I'm closing out if it comes back down through the low of the doji day. Why? Because that tells me they're going in this direction. Where are they likely to go to? Down here to the 50 or to the T line. Will it bounce from there? I have no idea. For all I know, they could be taking it right back down to the 200, so why take the risk? My worst case scenario, again, is they take it down, and then they turn it around and bring it back up through this level. I can always buy it back at that level, eliminating my risk factor, because if it came all the way down here and started coming back up again through this level, what's that telling me? That they aren't going down below the T line. They bounced off it and they're heading back up. I don't mind closing out a position here and buying back a position here, knowing that when I sold it, I didn't know which way it was going. When I bought it back, there was a good probability it was still going higher. I hope I answered. I get babbling. And so there are other times, too, where if I had bought silver, this is a silver chart, notice where silver failed, right here at the 200-day moving average. But let's say, hypothetically, I bought silver on this day because it was moving up, or let's say even right in here. If I bought on this day, which was today, because this looks like after hours, I wouldn't want to see it close more than halfway down this candle, because at that point, probably that would have been right at the T line, number one. And number two, if this was the candle that told me the bulls were in control, and they were able to close it more than halfway down this candle, the bulls aren't in very much control. The bears are still in control. If during the day they were able to bring it all the way back down below the open of the candle that told me the bulls were in control, that's where I'm out. That tells me if they are able to negate completely the candle that told us the bulls were in control, and doing that during the day, I close out the position at that point. So I'm trying to, we do have a video on stops, and there's still a lot of questions afterwards, so that means I've got to go back and clean it up some more. Yeah, hold on for a second, Rick. We'll get to individual stocks here in a little bit. Trying to go through, just kind of some of the analysis of what trades I was doing. I was long cattle, because notice what cattle did. Morningstar gap up, then it pulled back, closed it out, and then came back in again and had a good profit on Friday. So if you cut off the chart, I don't know whether I can. If you cut off the chart right here, it looks like we're in an uptrend. So where should this not be trading, or what should this be doing today? It should be opening positive and trading positive. Well, it opened and immediately started selling off. So I closed out the position. What was my worst case scenario? If it came back up through the open, that told me they were profit taking and heading back up, I'm back into the position. What I didn't want to be doing is holding on to something that looks like it wasn't confirming, in case it does something like this, which it did. So if I see a chart that says this doesn't look real great, it's not doing what it's supposed to, I close it out, because there are other charts, like lean hogs, where it opened up and headed way up and then came crashing back through the open. So I came out of cattle and went short hogs and had a good profit. Now what do we have down here? We don't have anything that's telling us they could get up above the T line. If this opens lower, we're still in the same downtrending channel. Let's see. You know, and so if I look at a chart like this is the dollar. So my first question would be, which way is the dollar going? Up or down right now? Well, the answer is, if you can't tell which way the dollar's going, yeah, it's going sideways, there's no reason to be trading it. Move on to something that looks more like this someplace. So again, this is where the visual aspects of candlesticks help immensely, is you can tell whether the trend is doing something or whether the trend is doing something. Okay, let's see what else was there. Yeah, kind of triangle forming, but right now I don't know which way it's going, so why have your money in there? We don't know whether it's going to crash this way or blast this way. Yes. So while this is consolidating, I can have my money someplace where I can see what the trend was and stay in that trend. Or if I see something that is just now starting, I'm trying to think. Yeah. That if the dollar's moving sideways, and I know that if it breaks, crude oil breaks out this way, I've got a pretty strong trade. So why stay in the dollar if you don't know which way it's going? Why not buy something where you know if it breaks out, you've got a strong trade to it? Is there a link to the video section? I think if you go to the candlestickforum.com website, go up to the very top and you'll see products and services, one of the top links up there. Yes, silver. Right now, notice the big bearish engulfing. You're not in the oversold area. You're near it, but you come up. Silver has popped up a little bit, but this is a very simple trade. I'd put my sell stop right here at the close today. If it comes back down through there, that means this very signal is still working. You want to be shorting that trade. And gold, same scenario. Ever since it broke down through the T-line, they haven't been able to get up through the T-line. More than likely, you can still be shorting gold. Yes, silver does have an ETF. I don't remember what it is right now. Oh, maybe it's SLV. Yeah, that's the silver short GOG and old stocks. Yeah, see, GLD is the gold trust. Yeah, you can short it. I usually short the contracts themselves because I'm sitting here watching every day. Okay, Jim, let's go ahead and do the double line. And let's immediately do another double line. We're just going to do a few tonight just to give everybody a feel for what's happening out there in the markets. This one, waste management, is an island reversal. Notice where it did it, right off the 50 at the same level it came up before. I would suspect at least a 45 degree off of here. And ENZY. That's got a little scoop action to it. You can be buying this one, but you have to make sure it gets up through the 50-day moving average very quickly. Here's another gap up, somewhat the same thing that we're looking at in waste management, where they gapped it down and then gapped it right back up. Your island reversal. I'd suspect this is at a 45 degree, the same trajectory that it had started. And DDD, what did I just do? That's not do. DDD, DDD is having a hard time getting out of its own way here. It's stuck in this trend channel. If you own it, it has to open positive tomorrow and start trading positive. Otherwise, if it opens lower, close it out because it's still in a sideways channel. Caterpillar, not a very exciting one to trade because the percentage move isn't all that great. You're in an uptrend, but notice how the uptrend is so slow that you're using up all your stochastics at this point. I'd probably be trading something else. Just it's not an exciting stock to trade. HZP, you stay long on this one ever since the J-hook pattern, especially if this opens positive tomorrow. Use the T-line as your stop. Halliburton, you can be buying this one, another one that's not real percentage-wise exciting, but you can see this coming out of big fry pan bottom, and it's just now gotten back to the gap area. So your first pop should be filling the gap, and then see if it has enough running room to continue right up toward the 200-day moving average. HPQ, having a hard time getting up through the 50, which also is this part of this downtrend. I wouldn't be buying this one. I'd rather pay $39.40 for it, knowing that it broke through this downtrending channel. Boston, ruh-roh. You stay long on this one as long as it stays up above the T-line. Notice when it took the big move, you're in that 45 degree. And KEX, starting back up. Let's make this a little bit bigger. But still having a hard time getting up through the 50, which it needs to do. If you're long, you stay long. But if it doesn't get through the 50 in the next couple of days, come back out of it. It's lost its steam. Apple, all you can do in this one is stay long ever since the message. Again, this is the message where they gap it up. Even though there's profit taking, notice what they did the next day. Told you that profit taking was over, that this gap up, especially through this downtrending channel, was telling you that there's new life in it. I have call options expiring Friday. Okay, in Apple, I would stay with them. CPE, I would look for this to head for the 200-day moving average on a little J-hook pattern. And NOG, just stay long as it stays above the T line. SALE, what did I do? Stay long. Notice what started this or continued this uptrend with a little bit more force. The belt hold signal, which told you they wiped out a lot of sellers, so there's not as many sellers now in the way. And DNR, another J-hook pattern. This one you can be buying on positive trading. 200-day moving average is your anticipated target. Johnson & Johnson, I wouldn't be long or short Johnson & Johnson. First of all, it's an institutional trader, which means it doesn't have very much movement to it. And there's not anything here on this chart that would make me want to be long or short. BDSI, with the breakout on the doji sandwich and closing right on the 3T line, you definitely want to see this one open positive. If it opens lower, it means they're coming back to test the T line. I'd come out on any weakness and then just see what it does once it gets back to the T line. MPW. No, that's not a fry pan, but that's more of a J-hook. This one, after that big hammer signal 2 days ago, tells you the reversal has occurred. You can be buying this one on positive trading. Whole Foods, look for a 45 degree. As long as it stays above the T line, you stay with it. Zyop. Stay long. Nothing wrong with that chart. Just some backing and filling. Budget, J-hook pattern. Again, not a very exciting one, but you're heading in the right direction. So the non-exciting ones, you can still do, as long as you know what your direction is, you can still do good option trade setups on them. BNFT. You've seen the little kind of spinning top reversal. A doji right at the T-line makes this very simple. If they open up positive, doing a doji sandwich telling you the T-line is not going to act as resistance, that is your perfect entry setup, is seeing a doji right on a T-line after some reversal signals. Ooh, this one, what is it? OGXI. Make it big enough. If, from what the chart tells me, this is moving sideways. I probably would have my money someplace else just because there's nothing there as far as a trend. CMG, if this opens positive, at least you know your next target is the 50, but you got to be aware that that's also a resistance level. EMP, we're still in this one. J-hook pattern. Friday they used the T-line area as support, and notice they use the 3T as support today. Still showing a strong uptrend. You stay with it. More. Uh-oh. Not enabled to contract more. All right. See if this works. Nope. Sorry, can't get more up here. AMND. Oh, and gold. Yes. One's the index. All right. JDST. Nothing exciting yet because your trajectory isn't there and you're starting to run out of steam. You can buy this with the anticipation that the pop, if it starts popping, should take you up to the 50-day moving average. Silver is the index, which is still heading down today on a kind of a kicker signal. And VDSI is a good example of when they gap something up, especially in the overbought condition, you put your stop. If they gapped it up and took it up, just put your stop right where it opened. Because if it comes back down through there, that tells you there's probably some profit taking going on. If there's something good happening, they'll keep taking it in this direction. So they did a big profit taking right at the breakout area. Since we closed out, if I was going to buy this back, I'd buy it back on any trading back up above today's open. That would tell me they're still moving in this direction. Let's see, GDP. That's a good little fry pan bottom breakout. Doji gap up. You can be buying this one. That's a good looking chart. Hopefully the volume is good on this one. GPro came bouncing back today, but it's still in a downtrending downtrend. If it opens positive, you can trade it with the anticipation that it's moving up to the 50, but you still have to be careful at that level that it gets through the 50. If it gets through this level, at least we know the next high was a higher high, and then you can start watching to see if it does a J-hook back up through the 50-day moving average. And there's the kicker signal that broke FEYE out. All you can do is stay long. You are in the overbought area, so you just set your stop right here at today's open. It shouldn't come back down through that level. 45 degree is usually after a very strong price move. It just kind of moves up in a steady 45 degree after that. I'll see if we come across another one. NXPI. At this point, you should expect, because you came out of a fry pan bottom, a cup and handle once it gets back to the T-line. So if I owned it, you can stay long on this one as long as it doesn't close below the T-line. Clean energy, just make sure this one stays above the T-line. Notice it's staying above the 3T line. And PAYX. Those are your big bullish Harami, hammer type signal, gap up. Remember, anytime you see a reversal signal and they gap it up afterwards, that tells you they've had a different change of investor sentiment. Darren, I guess that's that's something we'll have to ask everybody out here. Is how long does it take to get up to snuff? Now, this is why you see so much repetition in our trainings, because it's all visual, and as long as you keep recognizing and understanding what those patterns are telling you, you start now getting into the mode of, well, I recognize that, and I know that's bullish. At least I know the probabilities are in my favor. Here's a slow curve breakout. Just make sure there's huge volume on a $34 or 34-cent stock. That was on, okay. And this one is Cisco. Cisco, a 45-degree would be that it kind of moves in a steady trend up like this afterwards. Something along the lines of Netflix, where it had a big move. Now you're in a 45-degree steady uptrend. Let's see. All right. CAR, inverted shampoo, inverted head shoulders. Yeah, okay. I think this is what they call the three valleys in Japanese terminology, which is bullish head and shoulders. But right at this point, it's a J-hook type pattern that we can see easily came back and used the T-line as support. So if it opens positive, our expectation is this wave and this wave will be approximately the same. And ARRY, that's your 45-degree. Big move. Now, as long as it stays above the T-line, you're in this 45-degree. Okay, that was kind of impromptu tonight. Sorry for the technical problems today with Gary. I guess they've gotten him all straightened out. So with that, make sure you wear your heavy coats again tomorrow morning. It's still going to be cold. We'll see everybody first thing in the morning. We'll see you then.